Welcome to today's session. We are going to look at AARTIIND industry, which is one of the chemical sector stock. So we are at the quarterly chart, and what we can see, there is a strong bullish momentum. And last quarter the price was shooting up, and then there was a selling pressure which pushed the price down. Again, price opened up and then tried to go up, and are facing a selling pressure in the quarterly chart. Coming to the monthly chart, we can see the similar structure. We had a significant down move after the candle was bullish, so this created kind of a inverted hammer or shooting star. However, what we see is that whenever shooting stars are there, it has a continuation of price falling down. However, we are seeing here that the bullish momentum still continues and price is still trying to push up. Again, we are facing similar price challenges, which is evident in the current month. Now, coming to the weekly chart, what we can see here, the inverted hammer, which was shown on the monthly chart, is actually consisting of 3 weeks of data. One is bullish momentum, then there is a base candle, and there was a downward movement. So, if you mark this area here at the bottom base of the candle and the wick area, what we can see is the last week's price reaction, which was on January 14th week, actually reacted from this area, and then price is coming down. So what we can also see here is that this was one of the area where the bullishness was through a single candle, and the bearishness was followed by two explosive moves. Now, the one important thing to look into is that if we see this complete move here, this is the origin point. Let me change the color a bit. So if you see, this is the origin point of this move, but this closing of this candle was not able to break this level. Although it is a weekly candle and it has pushed the price significantly down, but it was not able to close below this, and then again found some buyer and going up. Considering this price momentum where we still see a bullish pressure, what we can expect is that there will be a short-term pullback before price can resume going down. At weekly, we can find this as a one of the structure, which is a rally base rally followed by a bearish engulfing candle. So the size of the candle is almost same. However, what we can also see is that the price has closed below this level. So what we can expect is that there could be some bearish momentum which could take towards the downside of this candle, which is a base. So let us mark this weekly base candle here. Now, one of the important thing to understand is that price is coming with some selling pressure, and this is the origin of the price. So once this price area is reached, we can see further good momentum towards the upside. So let us mark this area also. And let us see what is the status in daily. So if you see, these are the areas what we have marked. This is the supply zone on weekly time frame, and now currently price is coming to one of this weak area. Now here the important thing is that this supply zone where we are considering, there is a strong selling pressure, but price was able to move it upwards. This is the one area which was able to close above all this consolidation portion. So if I mark this area like this, which is a consolidation area, this is the demand zone which were able to push the price upward to the topmost portion from where it reacted with. Now considering this selling pressure was a bit high, but if you see, it was not able to penetrate the lowest level here. So it reacted from this candle, which is kind of a base, and then price went up. Again it came back, again price went up. While doing so, price created this another structure which is currently reacting from this supply zone. If the supply zone was not there, we could have anticipated that price would have gone upwards. Let me remove this portion. Now let us understand, we mark two weekly zones. One is this zone, which is at H4 and H5, and another zone we have H6 and H7. Now if you see H6 and H7, this area, which is starting from 20th of December and going till 4th of January, this area is not powerful. Furthermore, this area, which is on 20th December turning point, is actually a reaction from 22nd November turning point. So if I need to mark the line like this is one reaction, this is the second reaction, after which the price went up. Both of this reaction are originating from this point. Let's go to the weekly. In weekly, we are talking about this origin point here. Let me change the color a bit so it is easily visible. Now if you go to daily, this is the same origin point we are talking about. Considering that price has reacted from this area twice, two times, this is not a great area. Now in case price falls from this level, this is one of the untested area which is not having sufficient amount of candle. Furthermore, this is one of the area where price could again react from. So at this point of time, for this structure, the best bet what we have is in terms of trading this area, which is on a daily demand zone. Now if we understand one fact here, that there was a selling pressure, price is again coming down after hitting the selling pressure, and if you see, the initial selling pressure didn't have much of a week on top, and it started continuing and continued for 2 days. Look into this structure on daily. It also do not have a week on the upside. It is similar in nature, but there are some buyings here. Then price gapped down and then continued at the selling pressure. So the best bet what we have is that we can trade this area. Let us mark this portion at a shorter time frame. Understand how the structure is forming at 60-minute time frame. So if you see, this is the weekly zone and this is the bottom area of the weekly zone. On 60 minutes, what we can see is that this is one explosive move. We have a base and two exciting move, which halted for a brief here and then went up. Price never reacted from this area. So this is a weak portion, although it has so many exciting candles. Whenever you see similar pattern, that indicates that price is coming down with significant move. What we can expect here is that we can expect price to react from one of this area. So here we have basically three demand zone. This is drop, base, three bases, two rally, but this rally is not sufficient because it does not have a firm closing. Then we have a rally, base, rally. It has a good closing, but it do not have the continuation of move. And then we have this rally, base, rally, rally, which has a continuation of move. So what we can do here is that we can trade it something like this. This is the entry point. This will be our stop loss, and our target should be 1:2. So somewhere between 1071. Why we are having 1:2? Because we are trading opposite of the trend. Now if you see, price almost started reacting from this weak area. However, we have continuation of selling pressure. On a safer side, what we can also do is that we can trade this bottom area. So our entry will be 998.999, or consider it 1000, which is also a psychological level. Our stop loss will be 977. We can keep it up at buffer, and our target can be further reduced to 1:2. So let us look into daily. Where is the supply zone? The nearest supply zone on daily, which is also a gap area, is this level, which is 1054. Let me change the color a bit. Now going to 60 minutes. This is the same area where we are putting our target. Okay, so we can just reduce it a bit. So we get around 2.5 as a RR. So this is one of the trade what we can plan in Aarti Industries. Let me know your thought about this analysis, and in case you need some script to be reviewed by us, do let us know in the comment section. We'll try to take it up. Thank you for your time. Have a good day.